Where is the EURUSD likely to trend from here? That's what we're talking about in today's video. We'll discuss key levels and potential targets, and also the latest on the US dollar index, the DXY. Now, if you guys want to see my trades in real time and also get my hands-on help with your trading every day in Discord, click on the link at the top of this video. And for a limited time, when you sign up with Prime XBT and deposit $500 or more, you are going to get lifetime access to the real-time trading group with nearly 2,000 members and also the course that I just launched. So the great thing about Prime XBT is that you can trade forex, crypto, commodities, and indices all from one place. So see the link in the description of this video, or if you're on the website, scroll down from this video and you will see the link to Prime XBT right there. Okay, so let's take a look here at the EURUSD, which we've talked about a lot recently. And we've also discussed these two trend lines here. The first one being from this high back here in 2021. Then we've also got this trend line down here off of the November 2022 low. So this level down here hasn't quite come into play yet, but we did see the euro rotate lower over the past few weeks from this resistance up here that we've discussed at length. Okay, so you can see where the market is really coiling here over the last year and a half. And like I've said recently, including in the recent forecast video, this is really why we've seen a lot of these major currency pairs just go sideways here over the last year and a half, because we are getting this coiling action where these markets are moving into the apex of these patterns. So what that means is that right now we do have range-bound conditions. So that's important to keep in mind. However, at the same time, we also know that markets are going to have to decide here over the next, let's say, 6 months or so, whether we get a higher EURUSD or a lower EURUSD. And I think that with the amount of time that this market has coiled here, we are likely to see a very aggressive break one way or the other. The question is, which way does this go? But again, I do think the amount of time that this market has coiled, I do think that over the next 6 months or so, we are likely to get a very aggressive trend from the euro, because the longer a market consolidates like this, the more aggressive the resulting breakout is likely to be. Now, when we look at the daily time frame here, okay, this is the fake out that we talked about recently. So you can see that we had a critical area through here based on several factors. And you can also see where we got the close above here. The euro held above it for several days. We got the close back below, making this up here a failed breakout. And we got the retest right here on this candle. Now, at the moment, okay, this all looks very choppy, and it is because we have this 1.0725 level, which has been a factor going all the way back here to late 2023. Now, like I mentioned over the weekend, though, the key here for the euro is not necessarily what's happening on the daily time frame, because on the daily chart, if you look at this key level through here, you can see where we've gotten the close below, the close above, back below, above, and now it looks like we're going to close back below. So this is not a case where 1.0725 is holding up on a daily closing basis. In fact, it is very choppy. It really doesn't tell us a whole lot until you go to the weekly chart, because here you can see that on the weekly, 1.0725 has been a critical factor for the euro. So we know that this back here was a fake out. We got the rally following that move. Okay, so you can see the reclaim right here on this candle, retest as support, and we got the rally. Now, at the moment, we've now seen 2 weeks closing below this key area. Okay, so like I mentioned over the weekend, this is a case where right now 1.0725 is holding up as resistance on a weekly closing basis. Now, the tricky part for the EURUSD right now is, and I also mentioned this over the weekend, but if you are trying to short this from this area up here, okay, so this area up here around 1.0725, you've got to keep in mind that this level down here is that November 2022 trend line. Okay, so we haven't quite seen it tested down here at these lows. So even though I do think that we are likely to see the euro come down here toward 1.065, right? You've got to consider that if you are trying to short up here, you'd have to have a stop loss above these recent highs. And in that case, you'd be lucky to get a 1-to-1 risk reward. And for the way that I trade and the way that I teach, that is simply not good enough, because I always look for at least a 3-to-1 reward to risk. All right, now if we flip over here to the DXY, the US dollar index, we've also discussed this at length, and there are a couple of factors here that I want to talk about. So the first one being that you can see where the DXY, since the start of 2023, has moved within this channel right here. Okay, so this is a massive pattern for the DXY, and so far we are looking at the market coming off of the bottom of this channel. So if this pattern continues, then we are likely to see the DXY head higher over the next few months. Okay, because again, this is the channel that we're talking about here since the start of 2023, right? And this is one reason why, back here in this area, when we started out 2024 and we got the reclaim of this area around 101.9, you guys who have been around for a while will remember this is where I was turning bullish on the dollar. And since that time, we have seen higher highs and higher lows. Now, this down here was a fake out below this smaller channel. Okay, so this right here was bullish. So once we got the reclaim of this was once again bullish for the dollar. And since that time, we have seen the market move higher. Okay, so I do think that over the next 6 months, as long as the market stays constructive here, holding above levels like this through here, then I do think 109 to 110, as unlikely as that may seem, because that would be an incredible move, even from current levels, I do think that that is the likely path forward for the DXY. Okay, now it has been a little bit confusing so far this week, which is really no surprise considering what we've seen so far in 2024, which has been a lot of choppy price action. And the reason I say this has been a little bit confusing is because we did have yesterday close as an engulfing candle and also back below this area around 105.6. Okay, so you can see that going back here, we've got the closing prices through here. We've got resistance and resistance. Now, the one thing that I will say about this, though, is that, like I always mentioned, these are typically areas and not exact levels. So if you take that into consideration, then this area could be as low as this right here, which is the closing price on these two swing highs. So I'll show you what I mean in a moment here once I get this in place. But you can see where this area through here, okay, we've got the closing price back here. We've got very close to the closing price here. And that was also very close to yesterday's close. Okay, so if you were getting bearish on the DXY, the US dollar here, based on yesterday's candle, you've got to be really careful with that because first of all, like I said, this down here is a confirmed fake out following this close back above. That was bullish for the dollar and we've seen follow through from that. And furthermore, like I said, this is an area through here, 105.5 to 105.6. So this is an area of support through here based on these lows and these recent highs. Okay, so this close right here on Monday was not enough to get bearish on the US dollar. Okay, so from here, we probably see the DXY head higher up here toward these highs. As long as it stays above this region down here, remember, this is a support area down here for the US dollar. As long as it remains above this, then I do think the next stop for the DXY is going to be these highs up here around 106.5. Okay, now obviously if we get that and you're trading the EURUSD or analyzing the EURUSD, then this market could be below this trend line from late 2022 because notice how close the euro is to this trend line down here and the DXY still has a ways to go before 106.5. Okay, so a retest up here at these highs could put the euro below this trend line down here, but the weekly is going to be key because as you can see here for the euro, this pattern right here is holding up on a weekly closing basis. Okay, so some really key levels to watch here over the coming weeks. Like I mentioned, though, I do think it's a little bit tricky to be trading the euro right now just with how sideways it is. And also the fact that, trying to short down here, the risk reward is not great. You're also shorting after this kind of move, which is never ideal. So for me, at least, I would wait to either see if we get a retest somewhere up here, sweeping these highs, or ideally waiting for the market to really break down from this trend line that dates back to November of 2022. Because like I said at the beginning of this video, I do think that over the next 6 months or so, we are likely to see some very aggressive trends develop from pairs like the EURUSD and also the pound USD. It's just a matter of waiting. It's just a matter of patience here before those trends develop. Okay, so, difficult conditions right now, guys. But again, I do think that we are likely to see some very aggressive trends develop here over the next few weeks and months. Subscribe to the channel and click the bell for notifications. Don't forget to, guys, sign up with PrimeXBT, deposit $500 or more for lifetime access to the trading group and also the course. This is a limited time offer. See the link in the description of this video, or if you're on the website, scroll down from this video and you will see the link to PrimeXBT right there. Trade well out there, guys, and I will talk to you again tomorrow.